Okay, go ahead.
Okay, great. Good morning, everybody. Thanks for joining again. My name is Adrian Slater. I'm a commercial real estate broker and principal at Commercial Border Partners. I wanted to first thank our wonderful training compliance coordinator, Miss Francesca Arana, for hosting us today with Texas State University and Small Business Development Center, and her partner, Orlando. Um, Also wanted to introduce my partner, Roberto Chavez, attorney with Scott Hulse, who is always available to help us understand the legal aspects of our discussion. Roberto, if you'd like to say hello.
Yeah, good morning, everybody. For those of you that weren't able to assist last week, my name is Roberto Chavez. I'm a real estate attorney in El Paso, Texas. I've been practicing a little bit over 6 years now. And yeah, today Adrian will be doing his part of the presentation, but I'll be around to help with any questions you might have that I can assist with.
Great, thank you, Roberto. Of
course.
So like last week, we have a lot of material to cover, so I'm going to move fairly quickly through today's presentation. I'm going to provide some real life experiences and scenarios. So if you have any questions, speak up, put it in the group chat. I'll stop periodically to see if anybody has any topics they'd like to discuss in further detail. So today's roadmap, as we look at session number 2 on COVID-19's impact on commercial real estate, we're going to take a look at landlord considerations, including costs in lease agreements. We're going to really focus more on tenant considerations. We're going to do a quick lease review, review business terms, and approaching and negotiating with your landlord. We're going to look at some financial scenarios associated with rent relief solutions. And finally, we'll talk about if it's necessary, how would you actually get out of your lease obligations and liabilities. So with that, if we could go to the first slide. Okay. So if you're a landlord, what's important? Well, I think just like all of us in life, whether it's professional or personal, you've got to communicate with your tenants. You need to know what's going on in their business, what's happening with their clients and customers. The more you know about the party that's sitting on the other side of the table negotiating with you, the better. And this is also important for you as tenants. You know what the landlord is thinking about, how they're viewing the lease agreement, so that you can put yourself in the landlord's shoes as well. So what landlords are talking about right now is, what kind of rent concessions can I offer to my tenants to help them out and this time of need. We're going to get into different types of concessions and considerations a little bit further on in today's session. Landlords are always really focused on what does your credit look like, what does your financials look like, not just previous years, but really what's happened to you and your company in the last 6 to 9 months. I had a lease agreement that I was negotiating about 3-4 months ago, and the landlord wanted to see the tenant's business, the business model and their income and expense projections from the previous 2 years. But what they were really interested in looking at was what happened to their income and expenses since March, and what happened in their sales levels. How much did they drop off in March, April, May? And so that was one of the big drivers for the landlords in that instance, in order to determine, do I need 1 month security deposit? Do I need 2 months security deposit? Is it really necessary to have a personal guarantee? So be prepared to to talk about those things. We've seen landlords encouraging tenants to pursue insurance claims and of course apply for federal and state relief programs. We went through those scenarios quite a bit last week. If you were not in last week's presentation, please reach out to Orlando and Francisca, and she can provide that information. Landlords are always, in addition to rent, how much term is remaining. Lease term can always be modified and extended, and for landlords and their lenders, term is very important. So we're gonna look at how offering additional term could impact and be an incentive for landlords and a possible solution for tenants to talk about rent relief and rent reduction. Talk to them. Landlords want to know, again, how are you doing on your cash flow? Landlords have been taking in, I read a couple of statistics, but about 30% less rental income through August than they were in March. So that's the same thing for commercial real estate. Income is a driver for landlords and their banks, and but if their tenants aren't making sales, then it's kind of difficult for tenants to pay rent. So looking at the overall property cash flow, then of course landlords should always consult with their attorneys and accountants, their professionals to consider tenant requests. Okay. Next slide. Okay, insurance policies. Landlords are asking tenants to look at their insurance policies. Landlords should also be reviewing their own policies, as well as existing contractual obligations to their lenders and to other tenants to determine if there's any insurance coverage available for them. Rental interruption insurance is a big clause in insurance policies, and when tenants can't provide the rental payments, then sometimes that rental insurance premium and policy language will kick in. Landlords obviously should be in communication with their lenders. They need to be talking to their lenders and understanding their loan covenants and required minimum levels of rent or occupancy in their properties. And landlords typically are required to provide the last 12 months rental numbers. So if you are talking to your lender in the first quarter of this year, your last 12 months rent numbers probably looked a lot stronger than they did if you were talking to your lender a month or two ago. So landlords need to be able to discuss with their lenders what's happening with their tenants and with their properties. And nine times out of 10 times out of 10, lenders will almost always work with their landlords or their clients, our landlords, to avoid loan defaults and getting behind in mortgage payments. Talking to lenders about amortization period, loan to value ratios, prepayment penalties. I know we talked a little bit last week about the difficulty of business owners and potential buyers of real estate having difficulty in getting loans. But again, being able to talk to them about what's going on in your business typically gives the lenders more of a comfort level to either make a new loan or to work something out on existing loans. Okay. Lenders will always look at long-term market implications for property, and obviously that's got to be important to you as a landlord. What does the cash flow look like? if I have a shopping center or an office building and it was 95% occupied in December of 2019, and I'm now 82% occupied, what does that do to my cash flow? And as some of you may already probably know, properties are income producing assets are valued based on their cash flow. So a bank will look at how much money a property is generating, and based on that, they will value the property. Okay. A lot of lenders will prohibit, lenders and landlords will prohibit double dipping. And that's to say that, if a tenant has received relief from another source, from a governmental entity, SBA, the landlord will not always offer rent relief. And so landlords are basically holding that relief off for other available tenants. As we've seen, the SBA and banks didn't offer the PPP to everybody, unfortunately. They only offered it to some companies. So what landlords are saying is, if you've received relief somewhere else, I'm not going to give it to you, because you should be able to make your rental payments. And then what landlords also need to consider are lease, in any kind of lease modification or confidentiality or non-disclosure agreements. A lot of times, a shopping center might have 2 or 3 or 10 mom and pops all operating right next to each other. And during the day, an owner of one business might walk next door and they start talking and they say, "Hey, I'm having some tough times. What did the landlord do for you?" And the tenant next door says, "Oh, well, I got 3 months, rent abatement." And, the other tenant says, "Well, geez, I only got 1 month, or I didn't get any." So landlords need to make sure that tenants are maintaining any agreements that they come to on a confidential basis. Okay, next slide. So what are landlords looking at? Well, they're always looking at the bottom line, right? As are most business owners. And what are drivers for landlords? What are their cost considerations? Obviously, losing rent when a property becomes vacant is a big deal for landlords, and keeping spaces occupied and paying some type of rent, whether it's partial rent or just operating expenses, typically is a much better scenario for most landlords than just letting a space go dark. Obviously, their mortgage payments or their ability to pay those payments are based on how much rent they're collecting. When a space becomes vacant, landlords will have to invest money to repair and maintain that vacant space. Deferred maintenance is maintenance that has been left undone by a tenant. So landlord's going to have to spend money to paint and refloor a space again. So those are cost considerations that a landlord must take into account when they're considering letting a tenant leave their space. Operating expenses, typical carry costs with any real estate asset. You've got to pay property taxes, you got to pay insurance, utilities, common area maintenance. These are fixed or sunk costs that a landlord will have to pay with or without a tenant in place. Of course, legal costs for drafting new leases. That also includes brokerage fees. Typically leasing costs to obtain a new tenant are always going to be a lot higher than keeping an existing tenant. So when a tenant blows out of a space, landlords are going to have to offer free rent. They're going to have to offer typically an allowance. And of course, they've got to pay guys and gals like me brokerage fees. And just so all of you know, in case you don't already, landlords always pay our brokerage fees. So that is never, almost never a tenant expense or a buyer expense. Okay. All right, let's take a look at the lease review. Let's go to the next slide, please. I always have a discussion with my clients right up front. Everybody always seems to be focused on the dollars and the rent number. Rent is typically one of 38 to 40 different clauses in a lease agreement. I know it's important, but we can't just focus on the rent. You've got to make sure that you're reviewing a lease in its entirety, because there's a lot of other financial, non-financial considerations that are important for you to consider. Okay. Lease expiration dates and options. When does your term end? What renewal options remain? And what are the business terms of the option? What is the new rent? What is the notification period? And all of these clauses are important for you to understand, because in order to arm yourself with talks and negotiations with the landlord, you need to understand what your lease says. And again, these are some of the most important sections in the lease agreement. Guarantees. Are you personally liable in the event of a default on your lease? You probably have provided some type of credit enhancement, whether it's a personal guarantee, a corporate guarantee, or a security deposit. What is a security deposit amount? Is it equal to 1 month, 2 months? Is a security deposit 100% refundable? Can part of the security deposit be applied to rent in subsequent months of the term? Operating covenants and co-tenancy. This is applicable mainly to retail centers and shopping centers. Are you required to stay open for business? And if so, are specific hours or days required? And for its part, is the landlord obligated to maintain certain tenants or a certain occupancy level? And a lot of times that has to do with regional shopping centers and malls. Of course, insurance. Knowing what coverage you're required to maintain. Insurance coverage is an esoteric concept, and you shouldn't automatically assume what relevance your coverages have to your current situation. Take the information to your insurance agent and discuss it with them, and know what coverages you're responsible for. I had a tenant recently be obligated to purchase environmental insurance, and it cost a whole lot of money. They didn't realize it until after they signed the lease agreement, and they were not happy about that. So know what you're getting into before you sign on the dotted line. What constitutes a default? And what are the landlord's remedies if you do default? Can they charge you late penalties, interest? Can they evict you? Are there consequential damages that they can sue you for? And then, of course, force majeure. We talked in detail about that last week, and I think Roberto's going to get into even more of some of these legal terms and concepts tomorrow. Okay, next slide, please. So when we're, as tenants, and we are understanding what those important business terms are in our lease agreement, I just wanted to take a minute to talk a little bit more about certain terms in the lease. And a lot of these terms may not actually be in your lease, but if you have had any kind of difficulties in the last 6 months making rent, then you're probably more aware of these types of terms than you ever have been or ever thought you might be. So what's the difference between rent deferment, rent reduction, and rent abatement? So rent deferment is simply the tenant doesn't have to pay rent today, but that rent is deferred into the future, and you still must reimburse that rent at some point in time to the landlord. A rent reduction is simply a reduced rent, right? So you're paying $1,000 a month now, and the landlord's going to let you reduce that to $800 for the next 6 months, you don't have to pay that $200 per month back. And rent abatement is simply free rent, where the landlord says, you're having a tough time. You don't have to pay rent at all for the next couple months till you weather the storm. And we've all seen the saying, "We're in this together." I think that holds true for commercial real estate as well. I know it's a business. I realize landlords have to pay their lenders, but without that rental income, it's going to be more difficult for you landlords to pay your lenders. Right. So a concession is quite simply something that the landlord gives to the tenant in return for something else. It might be financial, it might not be. We'll break down some real life examples of these concepts here shortly. A renewal option, an expansion option, a contraction option. All of these options provide you as a tenant flexibility to either grow your space or downsize your space or renew the term of your lease agreement when it expires. So flexibility for you all as tenants is really key. And the more flexibility you have, the better you will be able to weather the storm, so to speak, and allow your space demands to grow or shrink along with your sales. That's not to say 1 month you can take less space and the following month you take more, but it's an option and an opportunity for you to discuss with the landlord. Okay. A right of first refusal or a right of first offer, sometimes it's called, is the ability to expand into the space next door. You're in a 2,400 square foot suite and your business is doing great. There's a 1,200 square foot suite next to you. Some point in time in the future, you might want to grow. You would like for the landlord to hold that suite off of the market until you determine whether or not you need the space. So right of first refusal basically just means that they've got to let you have the option to lease it before they lease it to somebody else. Okay. Tenant improvements, these are space modifications paid for by the landlord or tenant. Typically, we will have the landlord pay for the tenant improvements and then amortize the cost over the lease term. This is more important than ever as you're considering your space planning, your social distancing, your workplace signage, and how do you work with the landlord to get the most out of them for your business. Well, let's go to the next slide. So you're going to sit with the landlord. You've started to do your homework. You understand the lease. You understand the terms of the lease. You need to continue doing your homework so that when it's time to sit down with the landlord, or your broker sits down with the landlord, they know exactly what the tenants. You all know exactly what you're getting into. Insurance claims, we've already discussed this. Governmental relief programs, again, we discussed that last week. Are you a franchise? If you're a franchisee and you haven't already contacted your franchisor, you should. We talked about this a little bit last week. I had a client that owns a number of Subway sandwiches, Subway restaurants, and they have a franchisor who has previously announced that they are providing relief to their franchisees, so there's options and there's opportunities for relief out there that aren't just governmental oriented. So talk to your franchisor. Knowing the dates, how long have you been a tenant in the space? Have the tenant improvements that the landlord has funded been fully amortized? Will they continue to charge you for those when you renew your lease? And again, the financial scenario that we'll look at here shortly will see how those amortized tenant improvements are looked at by landlords and by tenants. You know, being a tenant in a space for 3 or 5 or 7 or 10 years, and you've never had any problems, never had any issues, that goes a long way. And sometimes landlords need to be reminded of that. And then obviously knowing your financial position inside and out, you know, deciding what kind of rent concessions you would look for, you would ask for from the landlord, and being prepared to have those discussions. And then finally, people like me, real estate brokers, we're specialists in this industry, in this business. You know, I have many of my own clients, tenants say, you know, they understand they're not necessarily equipped to represent themselves. You know, commercial real estate is not your business. Commercial real estate negotiating is not your business. Let the professionals help. We're here to help. We'd love to have the opportunity to support you all. And again, at the end of the day, the landlords pay our fee. So really, it's our services are free to you all. Next slide. Okay. So you're ready to talk to the landlord. Have your broker contact them. If not, contact them yourself. You know, what is your story? Be prepared to talk about your financial situation. Be able to show them how your sales have been modified, how your orders have increased or decreased, and be prepared with all the documentation that you need to discuss. Okay. Next slide. So you've done your homework and you know where you are. You're going to start to talk to the landlord. You know, investment in the property. A lot of landlords forget the fact that tenants maintain their space. Maybe you bought a new heating and cooling unit because that was your responsibility. Maybe you have replaced plumbing fixtures. You know, if a tenant has paid for any tenant improvements, leaving them when you vacate the space adds value to that space. You know, a restaurant ready or turnkey space adds value to a landlord. You know, startup costs, those are real costs. Those are sunk fixed costs that you have incurred to get your business going. And the landlord needs to know what those numbers look like. You know, we've talked a little bit about the trends. You know, prior to the pandemic last week, migration and retail, you know, from shop and take home to order online and deliver to me. You know, challenges that we saw in April and May, believe it or not, here in El Paso, we've seen them again in the last 10 days, 2 weeks. You know, we were at 75% occupancy. We're now back down to 50% occupancy. You know, we're obviously not out of the woods, unfortunately. So occupancy levels required by the government can change, and you know, those challenges, you know, they're going to continue, and so you need to be prepared to discuss how your business is economically been impacted, and is it viable when those occupancy restrictions that limit capacity are put in place, what that looks like. You know, retail space is going to be repriced. We saw that last week. Rental rates in Austin have already gone down. Lower rents are going to be required because restaurants and hair salons and other retailers have less revenue to pay rent. You know, current losses that are being suffered, Again, we've talked about this, being prepared to talk to the landlord about your financial situation. And then explaining to the landlord what it is that you have done to mitigate your situation. If you applied for disaster relief and were denied, show the application to the landlord. Let them understand that you're not just going to them with an open hand asking for a handout or a favor. Small to medium businesses typically only have 20 to 45 days cash on hand. And we need to be specific in our requests with the landlord. Going to the landlord and saying, I need some help, what can you do for me? That's not the recommended approach. The recommended approach is, this is where I was financially, this is where I am today, this is where I think I'm going to be in the next couple months, and this is what I need to remain economically viable, what my business needs. Again, landlords are going to always prefer partial rent. When I was growing up, my grandfather, he had a fun saying that I'll never forget. He used to say, son, would you rather have 50% of something or 100% of nothing? I think we all know what the answer to that is, right? Okay, next slide, please. So, we need some help. What are some options? It's not just free rent or deferred rent. Those obviously help out, and those are preferred. But I leased your space 5 years ago. I put down 3 months security deposit. I've been a good tenant. I haven't ever missed a rental payment, never been late. Can I apply my security deposit? Maybe you only have 1 month security deposit. Can I apply half of that security deposit to each of the next couple months' rent? Collecting common area maintenance charges. Could I pay you just for those fixed costs, Mr. Landlord, but defer or abate or reduce some of the rent and to a future pay period? We talked a little bit already about those different scenarios. We'll look at a minute and at the financial implications. Suspending late fees and interest. A lot of leases say if you don't pay the rent or you don't pay it on time, you're going to be charged a fixed fee, and then you're going to be charged a percentage daily or an interest rate for every day you're late. Ask the landlord to suspend those penalties and fees. Landlords are 9 times out of 10 more than willing to do that. Suspending defaults. Landlords, again, they're willing to help out in that regard. Asking the landlord if their building has a mortgage and what their base rent or their lowest mortgage payment is in order to adjust your monthly rent. Landlords won't always share that information, but we know that typically landlords will pay a mortgage payment equal to 70-80% of the rental payments for a shopping center. So, the landlord doesn't need you to pay your rent dollar for dollar to pay their loan. Know that, and that's a negotiating point. Asking a landlord to be open book on their side and share their information. Again, don't expect it, but it's the more you know about the party on the other side of the table, the better off you'll be. Okay, next slide. So this is what a rent deferment versus a rental abatement looks like. So the left table, the rent deferment example, your current monthly rent is $10,000. And the first 3 months of the year, you were chugging along real nicely, paid your rent, no problem. April, May, and June came around and you could not pay your rent. So you ask your landlord, can I pay that $30,000 $10,000 a month from April through June at the end of the year. Could you spread that out over the last 6 months of the year? We were very successful doing this earlier in the year. If this is something that you need to talk to your landlord about, this is what it looks like, the economics. So basically, you owe the landlord $30,000. If you divide that by 6 months, that's $5,000 a month. So instead of paying your landlord $10,000 a month, you would pay them $15,000 a month. And again, in this scenario, it just shows that you would pay that $15,000 from June through December. So your monthly rent is $120,000, and your deferred rent will continue to be $120,000. In the rent abatement scenario, in April and May, you didn't pay the rent, and you never repaid the rent. The rent was abated. The landlord forgave that rent. So instead of paying $120,000 over the year, you only paid $100,000. I guess I'll take a quick second. I've been running and gunning here. Any questions that anybody would like to ask as we're moving along here, or we can wait till the end if you like. Okay. All right. Next slide, please. Rent relief solutions. Really, this is what we've been talking about. You know, in the retail world, adding a percentage rent component to the lease, which can be structured to sales, that can be a benefit for your retailers. You don't pay a fixed rent. Excuse me. You pay a rent based on your amount of sales. Your sales go down, your rent goes down. In the deferral scenario, you know, adding interest to the future rent payment obligation, that could be an enticement for you to offer to the landlord. So not only am I going to pay you in the scenario we just looked at, the $15,000 a month, I'm going to pay you $15,000, you know, plus interest. Of course, you need to understand if you can make that obligation, but that's an incentive for landlords to consider. Committing to an extended term and negotiating a reduced rental rate. We're going to look at some financial scenarios that address that on the next slide. And providing the landlord with additional security enhancements. Maybe you don't currently have a personal guarantee. Excuse me, maybe you only have a security deposit. Offering up a personal guarantee in lieu of or in exchange for reduced rent is something that a landlord would be interested in, because what you're saying is, you know, I'm very confident in my business model. I'm just having a little difficulty right now, and so I'm going to give you some increased credit in exchange for rent abatement or deferment, and even offering to go into business with your landlord. This is the last bullet point because it's the last option, and I'm sure most of you wouldn't want to be partners with your landlords, or if you're a landlord, probably not really interested in being partners with your tenants. So, all right, next slide, please. I apologize, the numbers here are kind of small. I'm just going to kind of walk through conceptually what this cash flow represents. So basically, what this cash flow represents is what your current lease scenario looks like from a rent obligation standpoint. This is called a blend and extend analysis, where your your lease expires in 4 years. So you're, as an example, you signed a 5-year lease term. You're now 1 year into the lease. You're paying $12 a square foot base rent. The landlord amortized $60,000 in tenant improvements. So you're paying $10,000 a month base rent, $5,000 a month in tenant improvements. So your total rent is $18 a square foot. Again, that's $12 base rent plus another $6 for tenant improvements. So your remaining rental obligation is $720,000. That's what you owe the landlord between now and the end of your lease term in 4 years. The objective here is to reduce your $10,000 monthly payment. And so in this scenario, what we're going to offer the landlord is we're going to offer them a 7-year term, a new term. So we're going to add 3 years to the lease term, but we're going to ask for a $2,500 a month reduction in our base rent. So the $10,000 goes down to $7,500 per month, the base rent. You're going to continue to pay the $5,000 in tenant improvements. Most likely the landlord has amortized that cost or taken out a loan on it. So your new rent is $15 a square foot instead of $18 a square foot, right? So your new monthly payment is $12,500 versus $15,000. So your remaining rental obligation is $600,000 versus $720,000. That's over the next 4 years. Now, what we're going to do is we're going to offer the landlord 3 more years of rent, of lease term, meaning 3 more years of rental payments. And by so doing that, what you're going to do is you're going to be paying, instead of $720,000 over the next 4 years, you're going to pay $920,000 over the next 7 years. Okay, that's 28% more rent than the landlord would have otherwise received. The landlord's going to be receiving an additional lease term of 3 years. So now they've got that term fixed for 7 instead of 4. And in this case, and in this scenario, the landlord is not spending any more money. So they have no additional tenant improvement dollars or outlays. So if you look at the last 3 years, in section 2, where it says rent reduction and extensions with annual rental escalations, you'll see the last 12 months, the monthly improvement rent is $0. Now, what does this mean for you? So you were paying, or you're currently paying $18 per square foot per year. That $919,000 over the next 7 years, that equates to $13.13 per square foot per year. So you've reduced your annual rent from $18 to $13 a square foot. And quite simply, all you've given the landlord is more term. Any questions there? Okay, next slide. So this is essentially the same financial model that we just looked at. The only difference here is that you're asking the landlord to provide you with additional tenant improvement dollars. Why? Well, you've got to modify your space. You've got to change your racking. You've got to change your layout. You have social distancing requirements. You can't fit in order to fit the same number of tables in your restaurant, you need more physical space. You've got to put up barriers. So what you're going to do in this scenario is you're going to ask the landlord for another $180,000, but you're going to pay them back that money over the new 7-year term of the lease. So again, the same base rent scenario. You had a rental obligation of $720,000. It's now $600,000. But you'll see that you're going to continue to pay the monthly improvement rent of $5,000 over the entire 7-year term, not just the next 4 years. Why? Again, because you're going to get $180,000 today to retrofit and modify your space. So now what happens? Well, your $720,000 rental obligation becomes essentially $1.1 million over 7 years. your monthly, your rent per square foot per year still drops from $18 to $15.70. From the landlord's perspective, they're going to get 83% more rent than they had planned for or budgeted. Again, they're going to get 3 more years of lease term, but they are going to have to fund $180,000 in TIs to make your business, or to help you continue make your business viable. I know it's a lot to absorb. These slides, I believe, are available. So digest them, look at them. Call me afterwards. Call me tomorrow. I'd love to work with you. Love to show you how this cash flow works, and how we can approach your landlord. So let's go to the next slide. You've decided that you just can't continue operating. Roberto has the legal expertise to help negotiate some of these clauses as well. But what does a typical lease have? It has language that will allow you to sublease or transfer your lease agreement, or assign your lease. If you need to, work out a solution that gets you out of your lease, then that's what you've got to do. Approach your landlord about subleasing the space to a different tenant. Basically, that's where you lease your space to another company, but you remain legally liable for all terms and conditions. We're seeing this in a lot of restaurants. Maybe some of you have heard of the new term ghost kitchen. A ghost kitchen is a business that stays, that keeps their kitchen open. Their restaurant is closed, or the restaurant is partially open, but essentially they're renting their kitchen out to other companies or other restaurateurs to prepare their meals, their food, and deliver them or offer them for takeout. Ghost kitchens represented 5% of restaurants in 2019. Believe it or not, it's up to 20% today. Transferring your lease simply means that you assign all of the obligations to another company, and you essentially walk away, and you're no longer legally responsible for those rental obligations. Assignment, same concept. You're assigning the lease for another company, and you free yourself of most of your legal liability. A lot of times landlords will ask you to pay a buyout fee to do that. I've done this many times. Basically what we negotiate is a buyout equal to a percentage of your remaining rental obligations. We discount the cash flow or the rental stream to a present value. That's in finance, it's known as a time value of money. And it's the concept that the money you have now is worth more than the identical sum in the future due to its potential earning capacity. This principle of finance holds that provided money can earn interest, any amount of money is worth more the sooner it's received. So if you owe the landlord, $720,000 over the next 4 years, is the landlord going to roll the dice and you being able to pay that, or would they be interested in negotiating some amount less than that as a buyout? The time value of money is also again referred to as the present discounted value. Okay. So be armed with the knowledge that for most landlords, losing a tenant is disruptive and costly. Landlords incur major costs in the form of rental income loss and expenditures, which we've talked about. So they're going to sit down and they're going to negotiate with you. Don't be afraid of that. They're going to come to the table and negotiate. So let's go to the next slide. Early termination, that's what we just discussed. Terminating the lease early in exchange for some type of monetary or financial consideration. You might look at your scenario and think, I might be in a better spot today by just cutting my losses, terminating my lease, and going and finding a new location where I can get 6 or 12 months free rent. I can lower my rent. I can get more improvements financed by the landlord. You've got to look at your lease, how much term is left, what is your rental obligation, and there could be many other landlords out there that would like to have you in their space. I know moving's not cheap. It takes time, it takes money, but these are obviously some difficult times that difficult decisions are required. Other things that you can exchange for early termination besides money is, leaving your FF&E, forfeiting your security deposit. If you own a liquor license, that's worth something. Offering to return the space back to the landlord, fully cleaned and ready to be leased to another tenant. Landlords like that. If they don't have to spend money to fix it up and you've done that for them, that there's value in that. So of course, filing bankruptcy doesn't help a landlord, and that would just delay their ability to obtain possession of the space. Okay. The last thing is selling your business. Getting out from under your business altogether. There's different methods for financing the sale of a business. Offering seller financing as opposed to just selling your business outright. That's something that can be very attractive to a buyer. And again, we talked about that last week. Money isn't flowing from banks the way it was. I actually just put a church under contract last week, and the buyer basically said, I can't get financing, not because of my financial situation so much as because of what the banks are requiring, and the church decided to take back a note and seller finance it. If you're considering selling your business, consider taking back a note and offering your business for sale with financing. That lowers the potential buyer's upfront cost and can really make a difference in a buyer being interested or not. It just opens up the perspective and the number of potential buyers that you might have. Okay. And then of course, considering different types of amortization schedules, periods, interest, things of that nature. So we ran through a lot. We're coming up at the end of the hour here. And I'll ask if anybody's got some questions to put it in the chat or unmute your mic. We've got one from Mr. Orlando. Participating leases. Orlando, can you expand just a little bit on the concept? Is that participating in the sales? You mean a percentage sales lease? I think that's, you're on mute, Orlando, but I think that's what you might be talking about, is landlords participating in the profitability of a business owner by participating in the rental income stream as a percentage rent. So percentage rent is you pay a minimum rent, $10 a square foot, and then any amount of sales over $1 million a year, the landlord gets 3% or 5%, some percentage of that rent. Orlando, tell me if I've missed the mark on that.
No, you're right on. I just I noticed that in the explanation, it didn't address that, and I thought I'd kind of mention that because in Austin, there are still some participating leases that are still active, but they're not pushing it as much anymore. But back 10, 15 years ago, they were fairly active in these types of participating leases, which I thought was kind of I don't know, kind of an, I don't want to say underhanded, but if they're going to be participating, you're taking on a partner, they should be just as liable as the tenant, should be. But I don't know if they are or not. But in most cases, from what I've heard, they only participated in the revenue, but everything else, it was on the tenant.
Right.
Is that correct?
Well, that's surely the landlord's position, right? I'm only interested in the upside, but not interested in the downside. Yeah, just like everything, that's open for negotiation. I think that if your annual income or gross sales fall below a certain point, then yes, you should negotiate paying a lower base rent amount, because obviously, if you're obligated to pay $10,000 a month and your sales are off 50%, your ability to pay that monthly rent is not as great as it was before the sales fall off. So yeah, passing some of that risk back through to the landlord absolutely is what you should try to do as a tenant. Roberto, did you have anything you wanted to offer there?
No, I mean, on the participating leases, that's what I've seen as well. They're not interested in anything else aside from profit sharing. I haven't worked on one of those leases in a very, very long time. I don't know. I don't think they're very popular in the area. I don't know if you've seen them lately, Adrian, but landlords usually just want to get paid and they don't care about how the tenant is doing or not, as long as they're getting paid. That's what I usually see.
Right. Yeah.
And I'll just go ahead and just as for the sake of time, tomorrow we'll be touching on the legal side on the events of default and eviction, tort liability for exposure to COVID-19, rent abatement, deadlines and cure periods, some government relief, continued operations covenant, and some business interruption insurance provisions. So that's just a little bit of what we'll be talking about tomorrow.
Right. And I'll be on the call as well tomorrow if any concept we've talked about today, juggle your mind a little bit or raise questions in your mind. I'm available. Obviously, you have my contact information and happy to help anybody out with any questions you might have. So turn it back over to you, my friend, Francesca.
Thank you, guys. Okay, so a couple of things. If you haven't registered for part 4, I plugged in the link in the chat box. And then if you have a moment, please fill out the survey. Again, I will follow up with an email. Adrian did send me the slides, so I'll be sure to send those to you. If you came in late or you missed maybe parts 1 or 2 in that email, just reply back and I'll be sure to send you the link. And we will see you all tomorrow at 10:30. If anybody has any questions, just want to close up. Any more questions before we close out for today? Okay. If anything, when I send that email out, if you think of something, feel free to put it in there and we will see everybody tomorrow. Again, thank you, everybody. Thank you, Roberto. Thank you, Adrian. We'll see y'all tomorrow.
Thanks, everyone.
Have a good day.
Take care.